GME stock could be in the early innings of another short squeeze. And a matter of fact, the signs of this are screaming at us. Yet, nobody is talking about it. GME stock was up 4% on the day on unusual option activity, as well as a new institutional buyer potentially stepping in and buying GME. The last time a well-known public figure came in and bought GME and endorsed the company was Ryan Cohen, and the history tells itself. Now, here in this video, we're going to look at hedge fund positioning, what the big catalysts are for GME, where the short interest is, everything you need to know about this upcoming short squeeze will be provided to you here in this video. So, let's get into it, guys. Hit the like button and subscribe to the channel, but most importantly, source your comments, questions, or concerns down below in the comment section. I cannot stress how important this is. If I am missing something, if there is something bullish or bearish that you would like to hear about, let me know down below in the comment section. On top of this, share this video with a friend, with your family, with a group chat. Share it somewhere so everyone hears this information, because again, the short squeeze signs are flying in our faces. So let's get into it. Number one thing that I want to point out today, GME stock was up 4% today. Not a big shocker. Most of the markets were in the green today, or most stocks in the markets were in the green today. But what's unusual about GME is you actually seen 5 option trades today, likely by the same institution. They bought all these options, were the same expiration, same strike, same everything. They bought the January 19th, 2024 2875 strike calls. One trade worth $53,000, another trade worth $79,000, another trade worth $88,000, another trade worth $77,500, and the final trade worth $91,000. They are targeting this specific option expiration, likely preparing for the next short squeeze. But they're not the only ones that are buying into GME. As of GME's last earnings report, GME posted a net profit income of $48.2 million in the fourth quarter of fiscal 2022. Quote, that's a huge improvement compared to the company's loss of $147.5 million from the fiscal 2021's fourth quarter. GameStop is officially net profit. And they also plan to continue to slim down by reducing, quote, excess costs. Furthermore, the company intends to leverage its unique refurbishment capabilities to drive growth in the pre-owned game category. Hence, GameStop could succeed by catering to certain niche segments of video game users. Now, wait a minute. We're talking about a short squeeze here. So what does this matter? Well, as you guys seen from the last earnings, GME stock was up over 30% in after hours after they posted a net profit. Part of getting a short squeeze, or I guess the entire thesis of a short squeeze, is crushing the short thesis. If shorts are piling into a short position that they think is going to go bankrupt, in quotes, the next blockbuster, is what you hear people refer to as GameStop per their outdated business model. Well, if that short thesis is wrong and profits start to roll in, there is the recipe for a short squeeze. Now, it surely looks like institutional investors are starting to get behind that thesis. If we look at Fintel and the institutional filings as of recently with hedge funds, take a look at this chart. Ever since really June of 2021, there was a lack of investment in GME from institutional investors. After the initial squeeze of GME, institutional investors sold out of the stock. as of recently in 2023, you've gotten back to the same levels of institutional ownership of GME that you had before and after GME's share price skyrocketed in value. And as of the last couple of quarters here, the last 2 quarters specifically, institutional investors have started to buy a lot more GME. And if we take a look at some of the most recent filings of GME, BlackRock previously owned in 4th quarter of 2022 5.2 million shares of GME. They now own 22 million shares of GME. This is a 323% increase. BlackRock is the 2nd largest institutional owner of GameStop. Vanguard owned 5.9 million shares of GME as of the 4th quarter 2022. Now in the 1st quarter of 2023, they own 24.6 million shares of GME, amounting to an increase of 315% change in their ownership of GME. If these two guys don't tell you the big story here, let me just tell you, they are loading the boat on GameStop. If you take a look at other institutional filings, firms such as Jane Street have overwhelmingly bullish positions on GME. Same thing with Sequoia International Group. Same thing with virtually any other firm. Walleye Trading LLC, same story there. Walleye Capital, again, same story there. State Street owns 8 million shares of GME. D.E. Shaw & Co. just bought 1.2 million shares of GME. That is a brand new position. Sandler Capital Management, they just bought a bunch more GME. And the story goes on and on. The filings keep rolling in, and they are very bullish on GME. Now, the big news of the day today is this. Pulte ignites GME stock hype with GameStop tweet. Now, who is Pulte? What is Pulte? Well, he's a prominent investor, and this is his Twitter. Right here. You wouldn't think anything about this guy, right? This was the tweet that he put out. It's from the Computershare Direct stock listing. It says, "Success. Thank you for your purchase. You are now enrolled. Your confirmation number is GME," and then obviously blurring out this information. The name is William John Pulte. Now, who is William John Pulte? He is the founder and chairman of Pulte Group, one of the largest home construction and real estate development companies in the United States, based in Detroit, Michigan. So, we don't have a direct amount of shares that he bought or, specifics of this, but it's following the overall trend of institutional investors buying more GME. Now, the next big catalyst for GME, the likely reason why institutional ownerships are buying into GME more and more over the last couple of quarters, and why you've seen some specifically bullish option activity here today with GameStop, is likely because of the next earnings. Now, one fluke net profit quarter is not too uncommon. That doesn't really show a trend of profitability. But 2 of them in a row, that could be a very big deal. Now, GME is expected to announce the next earnings between June 1st and June 8th, 2023. The company has not yet officially set this earnings day, but that is what history tells us is likely the range in which they will report earnings. Now, again, we're talking about a short squeeze. So what does the short interest look like on GME? What are the factors that are going on here? Okay, yeah, let's look at it. Short interest value estimate, meaning the amount of dollars sold short in GME is 1.18 billion. The estimated short interest of free float is 20.14%. Free float out on loan, 29.03%. Shares out on loan, 77.55 million. This next factor is the most bullish thing that I could sit here and say. The days to cover is 17.4. There is about 54 million shares sold short in GME. So how the days to cover works is if you do 54, we're just going to round here, small numbers, right? 54 million, that's what 54 is representing, divided by 17, that means the average daily volume is around 3.2 million for volume. That means that if all 54 million shares that are sold short wanted to get out of GME, it would take 17 days to do so based off of the current volume. What days to cover being high is telling you is that it's hard for short to get out of their short positions if they wanted to, but number one, volume has been low. So when you get volume that increases, you're likely to get the share price to increase as well. So why are days to cover so important? Well, if you go to Google and type in what is a high days to cover for a short squeeze. In other words, a major short squeeze might occur if a low days to cover ratio tells you short sellers could easily and quickly cover their positions if the price of the security was to suddenly rise. A days to cover ratio of 10 or higher is generally considered high. Over 20 is considered extremely high. And it represents how long a stock short squeeze might last if an unexpected rally does in fact occur. And based off of what we're seeing now, this would indeed be an unexpected rally. Not a lot of people are expecting this. Nobody is virtually talking about this. And what's interesting about GME, specifically right now, is since their last earnings that you got back here, where GME rallied 35%, it came up and hit that 200-day moving average, got rejected. Well, now you could be heading into GME earnings sitting at roughly that 200-day moving average. You're very close to that. You're within $2 of that 200-day moving average. Now, if a rally does ensue with GME, on this split adjusted basis, that would take GME to its highs of January 2021 to $121. And although the short interest is a lot different this time around, the days to cover is higher, the institutional favoring of GME is higher, the outlook of the business is better, so the stock could actually go higher. It sounds crazy to sit here and say it, myself included, but even when you think about the factors that stopped that short squeeze in January of 2021, like Robinhood disabling the buy button and other brokerages, in this day and age, they would not think about doing that again. It wouldn't even cross their minds. Robinhood lost so much business, that is not an option this time around. So all in all, it's a pretty compelling story. At the very minimum, that GME could have, let's call it, brighter days ahead. GME going through a short squeeze could also push up other stocks, such as AMC, such as the other quote-unquote meme stocks that rallied alongside GME the first time around. So, with that being said, ladies and gentlemen, thank you guys for watching. If you guys want to come trade GME alongside me, link down below in the description of this video for the trading community. This is not financial advice. I cannot stress that enough. Anything could happen. GME could come out with terrible earnings, and that's a possibility. And the stock could fall by 30% this time around. Does that look likely, though, is the real question. I would say not with the institutional buying that we have seen as of recently. So that is going to do it here in this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Like I said, trading group down below in the description of this video as well. Thank you for watching, and I will see you in the next one.